Today I wanted to take a minute or two to talk to you about tips for simplifying the home buying process. Buying a home is super exciting. I know I'm buying one right now, so I wanted to give you some tips on how to make it easier on you as you're starting your process. Number one, you need to know how much you can afford. And if you're not ready to go to the bank yet, there's tons of home affordability calculators out there on the internet that you can play around with. A good rule of thumb is that your mortgage should not exceed 30% of your pre-tax monthly income. So that's a good rule of thumb to know. You're going to need to know what your credit score is. And to give you an idea, 580 to 619 is fair, 620 to 679 is good, 680 to 720 is excellent. If you're below a 580, you may have some credit repair to do, but you can see from all the commercials about credit repair, things are happening very quickly, which is good news for people that want to buy a house and maybe don't have the credit score. Number three, how much to save, or how much do you need for your down payment? And the answer to that is anywhere between 3 and 20%. Now, it's important to note that if you're putting less than 20% down, most lenders are going to charge you PMI. And what PMI is, it's mortgage insurance. So most lenders think that if you're not willing to put 20% down, that you don't have enough skin in the game and that you may default on the loan, which is why they're charging you mortgage insurance. So if you default on your loan, the mortgage insurance will pick up your payments. So you may want to talk to your credit union if you are having to pay PMI with the lending institution that you're working with. Some credit unions don't charge PMI. There's a bank called NACA, which is Neighborhood Association of America, and basically they don't charge PMI for anything under 20%. So those are options if you don't want to pay PMI. Now, Virginia has several grants for first-time buyers and people in need that will help you with your down payment assistance, and I'm happy to tell you about those if you have any questions. Number four, once you are ready to physically start looking at homes, you do need to get pre-qualified. Because number one, you need to know how much you can afford, and number two, because the market is so tight right now, most sellers are requiring that you do have a pre-qual to walk through their front door. So there's a pre-qualification and a pre-approval. Pre-qual you can do quickly over the telephone. The bank will pull your score, or pull your credit score, and talk to you about how much money you make. A pre-approval is what happens after you get your pre-qual, and it basically is you have to prove to the bank how much you make. It's when you send all the documents, your paycheck stubs, all of those things. That's what gets you to the pre-approval stage. And finally, number five, if you can swing it with low rates, do a 15-year mortgage versus a 30-year mortgage. Rates are so low right now that if you can swing it, it's the best case scenario for you to be able to build wealth. If you are 10 years into a 15-year loan, and it's a $200,000 mortgage, at 10 years you'll have $121,000 in equity versus a 30-year mortgage where you only have $42,000 in equity. So that's a huge difference in equity in your home. So if you can do a 15-year, that would be great. Now, if you are looking to purchase a home and you have questions or you want to start, I'm here to help. Anna Patahovich, 757-563-3448.